Hey everybody, it is Friday the 8th of March 2019, and this is Brian Shannon from AlphaTrends.net speaking. The market did pull back this week here a little bit after I think it was 10 up weeks in a row, and the market lost between 2 and actually the Russell 2000 4%, Biotech's 5.6% as we saw a failed breakout in that group. So let's take a look at the charts and of course try to make some sense of this all. The S&P 500, let's take a look at a 195-minute time frame. We'll start there because there's a couple interesting things. One, the year-to-date volume-weighted average price is right down in this area where we see the 50-day moving average at about 266.5, and then we have the volume-weighted average price off of the all-time high that comes into that area as well. So if we see further profit taking, this should be the area where the buyers do start to emerge between 266.5 to 268. Looking at a 15-minute time frame now, this is where I had gotten bearish this week. Now, if you saw my video on Wednesday, I was cautious because we were down to this volume weighted average price and we were below the declining 5-day moving average, but we had not yet made a lower low. Well, right here is where we made the lower low below the declining 5-day moving average, and that's the first time that that's happened since this rally began. So there's been a number of times where I've expressed caution. I expressed caution over in here as we broke below it, but once we made the lower low below that declining 5-day moving average, that's when I said that the intermediate term trend is now guilty till proven innocent. What we'll do, of course, is look for potential levels of support and look to those areas to see if the market does in fact stabilize. Not because I'm trying to buy the bottom in here anywhere. Again, I want to see the 5-day moving average flatten out, we get back above it, and then we will see that the buyers will be able to maybe regain control. But for now, we're in a pullback mode. That's fine. It's normal. This is, to be expected within a market. But the key is being too early or being right on time, basically, as it makes that lower low below the declining 5-day moving average. No one's going to pick the top or the low with any type of consistency. But if we wait for the evidence to say the sellers have gained control, then we can sidestep a lot of what ends up being the bulk of the decline. The NASDAQ also broke down here a little bit. Let's also look at the 195-minute chart in this. And again, for those of you who don't follow me for a while, a 195-minute period time frame is unusual, but it's very logical. There's 390 minutes of trading per day, meaning 2 candles equals 1 full day. The volume-weighted average price from the all-time high in the NASDAQ is found pretty much right in here with the 50-day moving average. That's the green is the 50-day moving average, and the year-to-date volume-weighted average price is that blue line. So a range where it seems highly likely if we continue to pull back 165 to 166, that's the likely area to become support on a pullback. Now, the Russell 2000 was the first market to kind of get weak, and that's interestingly right down on the volume-weighted average price from the peak. Still below us, though, we have the VWAP from January and that 50-day moving average. So we're kind of entering a zone that's likely to become support. It doesn't mean it will become. And right now, we are still below a declining 5-day moving average. So, of course, we don't want to be a buyer yet, not while we're making lower highs and lower lows below that declining 5-day moving average. And the orange is the 5-day moving average. So the momentum is still lower in the Russell 2000. The semiconductors, we broke down in here as well. And, of course, we have lower highs and lower lows below a declining 5-day moving average. The 195-minute time frame here, you can see there is our year-to-date VWAP and 50-day moving average down at about 96.5. So perhaps we continue to bleed off a little bit, or what's likely in a lot of these markets is maybe a return move higher before the next leg lower. That's typically the way they happen. So the S&P, for instance, might look like this, get trapped by the 20-day moving average, and then continue down towards that level. Typically, it's not going to go straight down. Doesn't mean it can't. That's why we don't want to be a buyer yet. But we want to look at the evidence. And as I mentioned I think on a video on Wednesday, as well as to subscribers all week, that it was interesting that And good to see that the prior resistance in the biotechs did in fact hold as support here a couple of times. But once we broke below that and trapped these buyers, as I mentioned, this is where we were looking for a failed move and a fast move lower because people had been trapped up in there. So it's a classic from a failed breakout came a fast move lower, the inability to hold those highs. Right now, we're right on the 50-day moving average. Below this, of course, we have the volume-weighted average price from the December 24th low. So if we're to see some further pullback, I think that, maybe on Monday you look for about 106.75-ish. That's the volume-weighted average price from the December low. And that's, perhaps the level that this market begins to bounce from. I think a lot of people are looking at this saying, hey, it's at the 50-day moving average. It should bounce from there. But what we often see is it will go to another lower level. And in this case, we have a logical level with that year-to-date VWAP. So maybe it does something like I just sketched in there. The financials also looking at a 195-minute time frame. We broke below the volume-weighted average price off the peak, but still holding above the 50-day and the year-to-date VWAP. Below that, we have at about $25.30 the volume-weighted average price from the low. Let's just go back to the daily time frame for a moment. You can see the 200-day moving average did have significance in the financials, but of course not with the rest of the market. That's going to wrap it up for me. It was just a quick summary this week, and hope you have a good weekend. Thanks for tuning in.